right now, before markets fully wake up, before headlines catch up. One metal is quietly leaving the global system. Not slowly, not gradually, but fast enough to matter. Silver just crossed $64 an ounce, and almost nobody noticed how it happened. There was no major crisis announcement, no emergency summit, no dramatic breaking news. And that is exactly why this matters. Watch until the end, subscribe, and remember this is not financial advice, because what comes next will permanently change how you see this market. Most people are looking at the price, very few are looking at the disappearance, because long before silver moved higher, it was vanishing, year after year, million after million, out of warehouses, out of vaults, out of global inventories, quietly. For a long time, the market ignored it. Analysts said supply was sufficient. They said demand was manageable. They said technology would adapt, but the numbers kept telling a different story. And now, the market is running out of places to hide. Because silver didn't just rally, it broke its structure. And some of the largest financial institutions are now confirming what many missed. This move may only be the beginning. Targets are no longer clustered around 50 or 60. They're moving higher, 65, 70, and increasingly $75 by mid-2026. Some are even discussing 100. Not because of excitement, not because of speculation, but because the math has turned brutal, and math does not care about opinions. Here's what makes this time different. In the past, silver demand was optional. Photography, jewelry, coins. Those uses could decline, and they did. But today, silver is embedded into the infrastructure of modern life. Solar panels require silver for electrical flow. Electric vehicles rely on silver for power management. 5G networks depend on silver-based connectors. AI data centers demand extreme conductivity. Medical devices rely on silver's antibacterial properties. Military electronics require silver for reliability under stress. This demand is not speculative. It is structural. And here's the part most people still don't understand. Silver supply does not respond to price. Nearly 70% of global silver production is a byproduct. It comes from copper mines, lead mines, zinc mines, which means even if silver prices double, production barely moves unless base metal mining explodes. And it hasn't. This is where the imbalance begins. From 2021 through 2025, the silver market has reportedly run a deficit every single year. Not small gaps, large ones. Industry estimates suggest that in 2024 alone, the shortfall may have approached 280 million ounces, possibly the largest deficit ever recorded. So where did that silver come from? It didn't. Inventories absorbed it, silently, until those buffers began to disappear. And now the pattern becomes dangerous. Global above-ground silver inventories are falling everywhere at once, in the United States, in London, in Asia. COMEX warehouse stocks have dropped dramatically over the last 2 years. London vaults show the same trend. In India, physical premiums have surged. Buyers are paying extra simply to secure delivery. That does not happen in a balanced market. Paper contracts can trade forever. Factories cannot. And factories need physical metal. Now layer in industrial demand. Solar energy alone now consumes more than 20% of global silver supply. And solar deployment is accelerating. Governments are not slowing the energy transition, they are accelerating it. Electric vehicles use significantly more silver than traditional cars. AI infrastructure places enormous strain on electrical systems. 5G networks multiply silver usage across billions of connection points. This demand does not reverse easily. Here's another mistake analysts keep making. They assume substitution will solve the problem. But silver has properties that are extremely difficult to replace at scale. It has the highest electrical conductivity of any metal, the highest thermal conductivity, natural antibacterial characteristics, exceptional reflectivity. You can reduce silver per unit, but you cannot eliminate it. And any reduction is overwhelmed by volume growth. More panels, more vehicles, more devices. Now consider recycling. Yes, roughly 200 million ounces of silver are recycled each year, but most silver is used in microscopic quantities, dispersed across billions of products. Circuit boards, solar cells, medical equipment. Recovering it is expensive, slow, often uneconomical. Solar panels last around 25 years. The panels installed in the early 2010s are only now reaching end of life. By the time recycling scales meaningfully, analysts estimate another billion ounces may already be gone. Now zoom out. This supply crisis is unfolding during a global monetary shift. The Federal Reserve has begun cutting interest rates. Liquidity is slowly returning. Real yields are falling. Historically, this environment is extremely supportive of hard assets. Gold responds first. Silver often responds more violently, because silver sits at the intersection of money and industry, a rare dual-use asset. Now let's talk geopolitics, because this is not just economics, this is strategy. China has signaled restrictions on silver exports beginning in 2026, not officially labeled a ban, but functionally similar. Why would China do this? Because silver is critical to their energy transition, to solar manufacturing, to industrial independence. Keeping silver domestic protects their future. India understands this dynamic and has been importing aggressively. The United States remains exposed, highly dependent on global supply chains. This is not accidental. This is positioning. We have seen this before. Oil in the 1970s, rare earths in the 2010s, semiconductors in the 2020s, now silver. When strategic resources tighten, prices do not adjust politely. They reprice violently. Now step back into history, because silver has followed this pattern many times before. Late 1970s, silver trades near $6 an ounce. Inflation rises. Confidence in fiat currencies erodes. Production is flat. Demand is climbing. The market ignores it until it can't. Silver surges 15, 20, 30. By January 1980, nearly $50 an ounce. A tenfold move in under a year. Regulators intervene. Rules change. The price collapses. But the shortage was real. The math was real. Next chapter. Late 1990s, the digital revolution, computers, cell phones, electronics everywhere. Silver demand surges. Mine supply stagnates. Inventories fall sharply. Silver rises quietly. Then the 2008 financial crisis hits. Investors flee to hard assets. Silver spikes again. Same pattern. Dependency, tightening, recognition, explosion. Now compare that to today. Modern civilization is fully dependent on silver. Energy systems, technology systems, defense systems, inventories are tightening. Recognition is beginning, which leaves one stage, the breakout phase. And this is where history becomes a warning. Because when inventories fall below 2 months of global supply, markets do not behave rationally. They break. 10% daily moves, 20% weekly gaps. We saw this with nickel in 2022. Price controls failed. The market froze. Paper contracts became irrelevant. Factories needed metal. Now consider the personal impact. Energy costs, solar pricing, electric vehicle affordability, consumer electronics, all are sensitive to silver prices. Higher silver prices ripple outward, into inflation, into supply chains, into national security. Military systems rely on silver-based electronics. Medical technology depends on silver's properties. This is not a niche metal. Now the future. Scenario 1. Escalation. Export restrictions tighten. Deficits continue. ETF inflows accelerate. Silver moves into the 70s rapidly. If this happens, the consequences could be immediate. Scenario 2. Strategic response. Governments intervene. Stockpiles are released. Recycling incentives expand. This slows the move but does not reverse the structural imbalance. Scenario 3. Global realignment. Silver becomes strategically hoarded. Trade flows fragment. Prices reset permanently higher. In this scenario, $75 is not the top. It is a checkpoint. So what should you watch next? Over the next 90 days, watch Chinese policy signals. Watch silver lease rates. Watch ETF inflows. Rising lease rates signal physical scarcity. Falling inventories confirm it. Watch solar deployment data. Watch central bank liquidity. And most importantly, watch sentiment. Because silver does not move when everyone agrees. It moves when disbelief turns into panic. We are not there yet. And that is the key detail. Because if this breakout is real, it is unfolding right now, quietly, relentlessly. Silver targeting $75 by mid-2026 is not a fantasy. It is a reflection of structural stress, a pattern repeated across history. Every time currencies weaken, every time industrial demand outruns supply, every time inventories disappear, silver responds. The only question is whether you recognize the pattern before the final stage fully ignites. Subscribe and turn on notifications. The next chapter is already unfolding.